I don't know. We're breaking the bank. In some ways, you guys wrangled the banks or got the banks to sort of work with the fintech ecosystem. I guess I like to start off just like a snapshot of the business today. Like what is your focus at Plaid at this moment?
Well, first off, thank you for having me. Thank you all for attending. There's a bunch of current and former Plaids in the audience. So,
I know there's been a little bit of Plaid mafia back.
Yeah, it's always wonderful to see. So we started Plaid in 2012. The core thesis was that banking was built for a world that didn't really envision the internet. That's basically the reason that all of you all are in this room doing the things that you do. And we thought that the missing piece was an API for your bank account. So how do you connect your bank account to any applications that are out there? We've been doing that very diligently for now 12 years. The core of our business is still like build an API for your bank account, allow you to link your bank account to any application you want to use, and then get
Are
value
most of the
out of it.
banks cooperating now?
Yeah, I mean, we have integrations with 12,000 banks,
Right.
Substantially every bank in the U.S.
Yeah.
I mean, it's not as if we didn't have ups and downs with a lot of them,
Right.
but at this point we've gotten to all of them.
Right.
Anyway, so bank linking, that's kind of what we did for the first 10 years of the business. The last 2 years of the business, we kind of in 2021-ish stepped back and reflected on kind of what is Plaid built, where are we, and what assets do we have, and we realized that we have a connection to the majority of people that have bank accounts in the US. We have a gigantic data set, a large amount of connections, and then a bunch of third-party data that's also coming in. And we looked at this data set and said, we really should pivot from focusing just on data plumbing to doing much more data analytics. And so more recently, you've seen us launch products around fraud detection and fraud scoring, credit scoring, and then a bunch of payments analytics as well. So these new, more kind of analytics-oriented businesses are now driving a huge portion of our growth.
What percentage of the revenue?
I don't think I can say that
What
publicly.
can you say? Can you give me any
quite substantial double-digit percentage points of revenue and growing fast.
Do you want to be a credit rating agency?
We are.
So you want to be sort of a peer of Equifax, sort of a direct competitor, or do
Well,
you see it as a different sort of offering?
So legally, we operate under a consumer reporting agency structure. So we are, everyone calls it a credit reporting agency. We are a credit reporting agency. Is our role in the ecosystem the same as Equifax, or is it different? Our take on credit is, I think, more unique, or certainly different than the way that Equifax looks at it. We believe that real-time data should be informing a credit decision as opposed to data that is sometimes 7 years old.
Yeah.
If you got a new don't get a new job, but if you got a new job tomorrow and your new job paid you twice as much, yet your expenses, your spending patterns didn't change, you're a much better credit risk. If you lost your job tomorrow, you're actually a worse credit risk because you have less income coming in. And the way that the credit bureaus currently look at creditworthiness is based on like your history of repayments, which is a useful input, but it doesn't actually say can the person make the next payment.
Yeah.
And so we think that bringing real-time data into the credit system is really important.
Is it at the core of this just we know you have money, therefore you're good for it, or?
Well, that is relevant for a really short-term loan. So if I give you a 30-day loan, sure, yes, do you have money? Are you good for it? Is the question. If I give you a 30-year loan, the question is more what historically have your patterns of income versus expenses look like? How much do we actually believe that in the future you'll be able to maintain this? So it varies based on the loan type.
And I mean, do you see this as replacing the traditional credit rating?
Certainly not in any short to medium term time horizon. I think it's very much augmenting a creditworthiness picture of a consumer. I think over time, people may well start to rely on it more, and you'll combine this with other elements of traditional credit data to build a fulsome picture.
Yeah. We went through a period of intense hostility towards mergers and acquisitions. You obviously lived through that with the Visa acquisition. That wasn't any reflections on that experience and how you would advise the government right now to approach M&A?
I don't think I should. Let's see. Lessons learned. Ask for a breakup fee that is dramatically larger than you think you should ask for.
Yours wasn't big enough?
No. I think it's impossibly large enough. No. More seriously, I mean, I think we ended up in kind of a negative sense being the first big merger to really get that level of scrutiny. And it was something where we looked at the businesses on the face of it, and we said, Plaid, we build bank linking services, and Visa builds card payment services.
Right.
These two things don't compete. Thus, there shouldn't be a lot of oversight. That's what lawyers said, bankers said, so on and so forth. The reality played out in a way that the government took a very harsh view. They were mostly focused on Visa as a monopolist, and it almost didn't matter what Plaid did.
Right.
They just wanted to not let Visa buy things. We ended up getting caught in this whole thing, and then there was a huge precedent set, and then there were many other mergers that got investigated heavily, so on and so forth. But in another sense, it was actually a great thing for our business. So I talked to our comms team, and our comms team jokes that we went through an IPO-like moment when we sold the company to Visa.
Right.
We went through an IPO-like moment when we unsold the company from Visa, and then we did a big fundraise in the back of it. And so the interesting thing is we sold the company at the end of 2019, early 2020, pre-COVID. We had a ton of publicity, a ton of growth, a ton of press. Then COVID happened. We then grew incredibly quickly. And on the other side of it, it was a blessing in disguise that we could then part ways with Visa when the exclusivity lapsed. And so, in the grand scheme, I'm not so disappointed by the outcome.
Right.
But certainly it was not a fun process to go through.
And you came away more supportive of looser M&A rules, or did you have a?
I think mergers should be easier.
Yeah.
To be clear, but.
A theory of the case, I think, around Visa was, Plaid in some world could be a disruptor to the traditional payment networks. Is there any case where you would go into sort of a direct competitive posture with Visa?
On Visa's core card processing business, no. That's not what we do. Do elements of every large business, does every large business have some element of something that may compete with some other business?
Right.
Sure, maybe. We build fraud detection tools. Visa builds fraud detection
Right.
tools. Could you say that those two are substitutes to each other? Sure, but I don't think we'd ever sell them to the same customer, and I really don't think that those products would directly compete. But if you're searching for a theory of a
Right.
case, you can certainly
Right,
find
you
a
can
theory of a
search for
case
one.
in a lot of places.
Right. Transitioning, how are you applying AI to your business? I guess I can ask that very directly. Are you seeing opportunities with generative AI? You're sort of a pretty sophisticated technology business. Are you finding the coding assistance helpful? Where are you implementing generative AI?
The answer to all that, I'm trying to find an answer that's not boring for everyone. The answer is yes, we're doing a lot. We're currently in the middle of a hackathon, which we call Plaid Days. We've done a bunch of AI days. Just seeing the usage, I was looking at our Claude Code bill this month, and it's getting to the point where I basically told the engineering team, make me uncomfortable with how much you're using Claude Code. And now they're starting to make me uncomfortable with the amount of money that we're spending on it. So that's a good sign in my book. I think, but I don't want to bore people about making engineers more efficient.
Right.
The interesting stuff that we're doing with AI, I think just foundationally, when Plaid launched, we were very focused on building an API that developers could use, and that was considered to be innovative at the time. For us, it was logical, but relative to our competitors, it was relatively unique. Now I think the format of an API changes, the process through which you sell APIs is fully changing. So we did an MCP launch with Anthropic a couple weeks ago. We'll have a bunch more similar-ish launches coming up soon. And we're trying to make it just incredibly
simple. So you're
simple.
going to be connecting people to the models, or I don't know, what's the partnership with Anthropic exactly?
We're making it such that you can point your Claude instance, or eventually, actually quite soon, you'll be able to point your cursor instance to a server that Plaid hosts. That makes it super easy to do an integration with Plaid. So you can basically say, hey, please build a Plaid integration that does X or Y or Z.
Great.
The X or Y or Z, we're still filling in
Yeah.
some elements of those. And then very quickly, the integration will be built for you.
I wanted to get to exactly that point. If you imagine this world where agents are operating autonomously, do you see Plaid as a sort of potential layer of protection? How much are you telling your customers building on top of Plaid, you can't let your agents just run wild and make all these purchasing decisions? How much do you see yourself as part of that decision-making process versus saying, that's really between our customers and the banks?
So I think let's be precise on who we're talking about here. we are building tools to help our customers, meaning developers.
Right.
So let's say you want to build a new budgeting tool. It's Eric's wonderful budgeting tool.
Right.
When you're building Eric's wonderful budgeting tool, you need to write the code to do that integration. We're focused on making that really simple and easy. You ultimately then will have users of Eric's wonderful budgeting tool, and our expectation of your security, your compliance posture, your privacy posture, that hasn't changed. And so at that point, like, you are still very responsible for that, and we will have oversight of that and make sure that you're doing a good job. And for the end user, we're not suggesting that you should or shouldn't use AI for that user experience that you create. That's ultimately up to you.
You're saying it's sort of abstracted away, that like you are not dealing with the agent directly. That's sort of a part of the overall suite of services.
We're dealing with your agent, the agent that is helping you to build this product.
Right.
We're dealing with that. We're building tools for that.
Right. But you can imagine all these agents wanting to like ping bank accounts.
Yeah.
Are you enabling that?
Yeah, our customers are. Yeah, our customers are building things that would enable that. I mean,
and you don't see yourself as a blocker to that happening.
No, it's gonna happen.
Right.
Right. Like we are all gonna have tools that do our finances for us. Like, there's no reason that I'm not gonna have an AI accountant.
Right.
In a year.
Right.
And the AI accountant is going to text me every time my balance drops below $500 or whatever it is.
I mean, I'm excited about this. I think an accountant is slightly different than Eric's personal shopper, or like if I.
Well, it's going to happen
do you think we're close to like agent making purchasing decisions on my behalf autonomously? I guess that's. Do you think that future is close?
I mean, I think we're within 12 months of those kinds of things existing.
Yeah.
Whether you'll use it or not, I don't know. I'll certainly use it, but I'm also probably like the worst person to ask from a...
You're like, I'll try anything.
More or less, yeah.
Obviously, Plaid has enabled so much of what's happened in fintech. You made it possible for people to sort of make all these integrations. What are you seeing in the ecosystem right now that's exciting to you?
Oh man, that's a broad question. You mean just in fintech in
just
general?
Like, companies you're interested in, or wherever you want to go with it. Just like what is most exciting to you at this moment in terms of what your customers are doing?
Yeah, so I'm going to try not to shop my own book too much. But I do think that a lot of the newer wave lenders that are thinking about lending based on different data are doing interesting things.
Unique data?
Yeah, like newer, more tech-oriented lenders. We've already talked about that though, and obviously, like we're making a big push in fraud detection, and there's this like crazy cat and mouse game that's going on right now with the fraudsters using AI tools to create deep fakes and other ways around defenses, and then us and many others using kind of the tools to fight them.
Right.
And it is like I shouldn't. Enjoy it so much, but it is like a really fun game to play this cat and mouse game.
Are the attackers better equipped than the defense?
We're in a period of time when they probably are right now, and I don't think it will last all that long. But I don't know if they're better or worse, but let's say that they're like relatively evenly matched right now. So it's scary. I mean, if you look at the statistics, financial fraud is growing at something like 20% a year right now, and that's terrifying, off of a huge base.
And what's the main technique they're using that's making them more effective?
It varies. Like social engineering is, you've probably, I don't know if you've heard of this. There's a thing called pig butchering. Do people know what that is? Yeah, okay. There were some Wall Street Journal articles on it. Basically, like it's people in these like camps that are just texting old people to try to convince them to like send them money.
Right.
Now you can just do that with AI, right? Like, you don't need the people in the camps. It turns out the economics of pig butchering becomes much cheaper.
Yeah.
It's a terrible name, by the way.
Right.
And so you're seeing tons of social engineering. You're seeing deepfakes. You're seeing all sorts of stuff out there.
And what are you developing to respond to it, or what do you see as the opportunity in terms of combating this?
Yeah, I mean, it's just better tools to identify that's an atypical action. You should create a user step up for that, or you should call the user to tell them like, hey, are you sure about that? You should have a support agent reach out. It's also just trying to identify the sources of it as well, as best we can. So it's been scary, but fascinating.
I got a flood of emails trying to bury some random expense. An email bomb. But I don't know if I can blame AI or not. But it's easier than ever to like automate a bunch of email signups to like flood you.
My inbox is horrible now.
Yeah.
Like the amount of AI spam that I get,
Right.
it's like pretty decent AI spam. But
Right.
It's a lot of it.
Have you had a voice vector attack where somebody?
No, but we a good friend of mine launched a security company that created a deepfake of me. I helped them train it, and it's really good.
And you've like tested on friends to see if.
Well, we've tested it inside the company to see if people will take action.
And do they?
Not yet, but knock on wood. At some point, I'm sure we'll find someone that'll do something.
Have you Have you built any like security practices within the company to try and defend against that?
Other than trainings, no.
Moving on to sort of like the regulatory environment, like what is your sense of the opportunity right now? I think there's this sense that, sort of the Wild West, I think somebody said, it was like there's a lot of opportunity to do what you want at the moment. I mean, do you agree with that? And also, do you think companies are thinking with a sort of longer term time horizon where they're like, well, maybe I could do this during this administration, but not the next? Or what are you seeing in terms of risk taking within fintech?
Yeah, I've been in DC quite a lot so far this year, and like my reflections are, first, the level of regulatory engagement is very, very high. So regulators are wanting to talk and willing to talk to almost anyone, which is great. In past administrations, they weren't always willing to talk. Second is the level of predictability is incredibly low. So the things that we thought were true a month ago are now no longer true,
Right.
and they may become true again a month from now. Which actually just makes innovation quite difficult. I suspect that pace will slow down as this administration starts to get kind of their key priorities out there and moving in the direction they want them moving. I think there are big risks out there as well to a lot of pieces of the ecosystem if certain things are repealed or things are modified significantly,
Like
or just not regulated. Like one of the risks, for example, that we're focused on is like 1033, the open banking regulation in the U.S. There's some risk on like how is that going to actually be enforced? If there's no CFPB, is that going to be enforced in any way?
Right.
Is the rule itself even going to stand?
Right.
And the good thing is, Plaid as a business, we've existed for a decade before the rule. The rule will eventually be out there, whether this administration or the next. And so we feel fine in our
Sorry,
position.
what would happen to you if it would mean that you can't?
It would mean that banks may no longer be required to have APIs, but they would still be required to share data.
Okay.
So the net effect would actually be, in my opinion, just chaos.
Right.
So the banks would all have all sorts of different APIs.
So it might go back to the world where you're sort of forcibly consuming bank data.
Yeah, we're still in a world where there is some scraping, especially amongst the small banks. They don't have the budget to build an API. So that'll still continue, but then I think just the fragmentation, the number of bank APIs that will be out there will be very, very high, and the complexity to integrate with them will be high.
Do you have what % chance this gets?
I honestly have no idea.
It seems pretty existential.
It's not existential. It creates complexity in our business.
Right.
Actually, being a larger player, complexity is generally a good thing, right?
Right, because you can react better than everybody. Existential to people building a small business.
We'd rather have simplicity, to be clear, but I think we'll be fine either way.
Zooming out, what do you think the future of a bank is? Like, how do you, we're calling it breaking the bank. The fintechs have been running at banks. Like, but then on the other hand, we had, what your co-founder has started a bank, and we've, heard from a lot of tech banks today. It's sort of a philosophical, I know it's a big question, but how do you see banks evolving over the next decade?
That's a good question. I mean, there are big and little things that'll change. One, I think we're going to see continued consolidation amongst the small regional banks. That's just going to happen. I think we're going to see continued expansion in the number of banks if you count neobanks. That's going to continue to happen. I actually think that AI and agentic interactions are going to drive a rebundling of the bank. Over the last 10 years, we've gone through this big unbundling of the bank. So, I can use JP Morgan for my checking account, but I want to make my investments on Robinhood. If I'm interacting with an agent, I think there will be friction when transitioning between services. So if I say, hey, agent, move some money from my checking account to make an investment, I think that's going to end up being a lot easier within a single bundle. So within JP Morgan, I could say, move money from my checking account to my investing account and invest in Apple stock, whatever it is. Doing that across platforms, I think, is going to be more complex. So I actually think there's going to be a rebundling opportunity, and I think consumers are going to be more excited about that. But
That's
who
super
knows
interesting.
really? I'm just guessing at this point.
Last question. Our last question. I asked Josh a similar version, but you've been at this a while. You've built a successful company. What is a piece of advice that you give to a founder starting a fintech company today?
Yeah, so people ask me for founder advice a lot, and I try not to give advice because every journey is different, every situation is different. The only real advice that I have to anyone starting a company is don't die. And it sounds a little dumb and maybe a little dark, but like there will absolutely be a bunch of times when your company is definitely going to die, and if you choose not to let it die, you're going to be just fine. Now, there are some caveats where like you started a business that is actually a terrible idea and you should maybe let it die. Luckily, Plaid has not been in that situation. But there have absolutely been times where you kind of like look off into the distance and you're like, man, this future looks pretty bleak. But then, I mean, it's just the founder thing. You think about it, you do some work, you try to make it look less bleak, and little by little, inch by inch, you end up like moving forward. At Plaid, there have been like 3 or 4 times where we had, and not recently, where we had like less than $100 in our bank account, and like we had to freak out about how we were going to hit payroll. And yet, if you make the decision that the business is not going to die, it turns out it doesn't. So don't die.
Persist. All right. Thank you very much.
Yeah, thank you for having me.
Thanks. See ya.